Getting a mortgage is a big deal, and even one small mistake can throw your entire approval off track. So in this video, I'm breaking down the most common mortgage mistakes that could cost you time, money, or even your dream home. And more importantly, how to avoid them. First thing we're going to cover, taking out new credit after you have your pre-approval. The number one mistake I see, taking out new credit after you've been pre-approved. Whether it's a car loan or credit card, it can throw up your debt service ratio and kill your approval. Watch a video on calculating your debt to income or debt service ratio to see in detail why this can cause your mortgage application to be declined, although you have a pre-approval letter in your hand. So do not take out new credit while trying to get a mortgage. Second, failing to shop around. Don't just walk into the first bank and accept the offer. Interest rates, loan terms, and loan options can vary widely. Consider working with a mortgage broker because they can help you compare loan terms and find the best option for you. Third, not budgeting for closing costs. Your mortgage won't cover everything, so you still need money out of pocket while the loan is being processed for closing costs. These are costs like legal fees, valuation report, surveyor's ID report, letters of undertaking, and your sales agreement, as well as a loan processing fee that's charged by the bank. Not having these funds ready can cause serious delays or a rejected application. Fourth, moving or using your closing costs. If you set aside funds for closing costs, don't move them, don't lend them out, and don't spend them. Even something as simple as removing that money from your account can cause a transaction to fail. A good idea? Keep it in a fixed deposit account until the process is complete or wherever your attorney recommends that you keep it. Pitfall number 5, expired IDs. If your passport or any ID is close to expiring, renew it now or as soon as you're able to. If it expires during your assessment, it can delay everything. You need a valid ID, and in the event your passport expires specifically, you'll need a valid driver's license as well as a copy of your birth certificate to verify your identity. So keep your documents up to date. Number 6, not checking your credit report. Get a free copy of your credit report and review it before applying for a mortgage. Errors can take time to correct, and time is money in this process. Next, no proof of closed credit accounts. If you've recently paid off a loan, like a student loan, you'll need an official proof from that lending institution that account is closed. Note that everything is a process and requires time, which causes delay to the mortgage process. So, for example, say you pay off your student loan to fix your debt to income ratio, then you put in an offer to purchase a property and it's accepted. You now need a letter to prove that you repaid your student loan, which can take about 2 weeks at best to be prepared. So, if you close a credit facility immediately before applying for a mortgage, get a letter to confirm that you did. This confirmation, as I said, can take up to 2 weeks, so request it early and remember what I said about the cost of delay. Finally, we're looking at adding a nominee too late. If you're thinking about adding someone to the mortgage after you've been pre-approved, that's a bad idea. What this is going to do is trigger a full reassessment and reset the clock. So, if you know you want to add somebody to the mortgage or add someone to the title, do it up front. So, in closing, every step in the mortgage process takes time. So, don't wait, don't cause any unnecessary delay. Start gathering your documents, fixing your credit report errors, and organizing your finances early. Here's the golden rule: be still from the moment that you are pre approved. And if you decide to do anything, resolve errors on your credit report or close a credit facility, then make sure you get the letter to prove it. Avoiding these simple mistakes can be the difference between getting your keys or starting over.